All right, good morning, guys. You're welcome. For those of you that's joining us, this is Trader C. Brown, or you can say Charles Brown. So, all right, good morning, guys. You're welcome. For those of you that, let me see that. Mute that, mute that, mute that. Okay. We're gonna wait for others to join us quickly. And I'm expecting to take a buy on GU. Although GU is a sell market, but I'm gonna counter trade this buy that just happened. So hopefully it does. That's why I'm waiting. Otherwise, there's no need for it. It might continue selling, it might continue dropping depending on price action that I'm waiting for on this FIB. But I will wait for others to join us and we'll talk about a few things. This is a general class. In other words, I'm streaming live on YouTube as well. And this message has been sent to all my followings at different platforms. Thank you. So we will look into a few things about trading today, and which I believe a lot of you need to know. All right, a lot of you need to know. Very important. Now, today's Wednesday. I'll just do a little bit of the week recap. What we have experienced through the week so far. This is Wednesday. So I will talk about the trade we took on GU and the trade we took on SP 500 for the week. Those are the two trades we're taking so far. And it was a huge success in the trade that we had on it. So now let me go to the 4-hour time frame on GU just to show you something. Now, before I start, I want you to take some notes because it's very important that you take note. You must learn to trade with the trend. I know we have counter traders here. We have reversal traders here. We have a lot of traders who look at the market different ways. But I will say just follow what you see. There's nothing new under the sun. Don't try to reinvent the wheel. Just follow what is done, what is followed, what is being experienced by people, professionals in the field. Candy, do not write on my chart, please. No one should annotate on the chart. All right, do not annotate. Do not annotate on the chart so that we can have a clean stream and recording. All right. Good morning, everybody. So let's go. We'll look at the trade so far for the week, which is about a minimum of 5% so far that we've had on the trade for the week. And sorry, let me remove this line that is there. Please do not annotate. That will make me go over and over again trying to remove the stuff. Do not annotate, please. Okay. Trade with the trend. Tell somebody, write it down. I think you should write it down, not even tell anyone. I thought I'm in a conference hall. Listen, trade with the trend, follow the trend. All right, it's very important. But you may say, well, why are you not trading against the trend today? Because of what I'm seeing happening on the 4-hour. So the market is about to start changing momentum. We can see it's beginning to approach like a reversal pattern is being formed. So I'm looking at what the market is going to do with that, which obviously there's a test on that trend line already. So learn to trade with the trend. Learn it. It's a skill that you need to have. Everybody must understand that the trend is your friend. Now, this is not just a gimmick language, not just something that people use. It's not a cliche like people say. This is not a cliche. It is what it is. If you have done your research, you know it is what it is. If you trade regularly, you know it is what it is. If you've seen the market in many directions and patterns, you will know it is what it is. You have to trade with the trend. Follow what works. Okay, very important. This is a mentorship class and slash chart analysis. So I'm going to be doing both. I have a cup of tea here, so we are all here together in the next couple of minutes. Who knows, maybe an hour. Okay. So what we need to do is to understand what goes on the higher time frame. So last week, we were able to sell. Sorry, this week, which is on Monday. On Monday, we took a trade here. We sold at this level, this place. And the question is why? Well, there are different strategies that makes us to look at that area of interest. Of course, we know that the market is selling. I know some people bought here and expecting price to come up here to fill up the imbalance, but it failed. Long ago, we stopped trading like that because that doesn't work as we always anticipated. And even though you design a strategy, which I have a strategy around the imbalance, not all the time that the imbalance is filled, especially when you have imbalances like this on a bigger time frame. It will take several efforts, time, and days and days for market to come up there. So for that reason, it is not something that you want to be putting your effort in strategically to start trading that all the time, because most of the time it works, but you have to look at multiple pairs to be able to take advantage of that strategy. And in most cases, you might be losing some money as well. Okay, so it's very important. Let me just remove the drawings on this chart. It's very important to know what the market is doing. So zoom out. Tell somebody zoom out. Write it down, write it down, write it down. Zoom out. Zoom out. What do you see when you zoom out? What do you see? The market shows you, it shows you something. It lets you know that either we are trending or we are consolidating. So we saw that the market did something here. Since December last year, we saw this. This is what happened. Since December last year, the market began consolidation for a long time. Now, remember, this is 4-hour time frame. So that doesn't mean as a trader, you can't trade all these days. We're trading all this movement. So we just need to know what to do. But if you were trading like you're trading a swing trade strategy, definitely you will not be able to catch a reasonable trade on GU so far. You'll be waiting for the market to break out of this zone. So I want to, the reason I'm saying this is to let you know the importance of trading with the trend. Okay. Let me adjust my camera in a bit. It's the importance of trading with the trend. You need to know why you should be trading with the trend. Okay. A lot of people don't know that it's so important to learn it, to have that conclusive approach to the market. So we can see that from this year, January, the market smashed all the way down, took out that liquidity, and then rejected at this level, rally up to take out liquidity here, and then came back into the consolidation, and then play around for a while, and then eventually broke out of the consolidation. So my question to you is, what do you think the market is doing now? You see a breakout of the, I'm trying to explain to you why I'm buying this market. So some people don't still get it. So I want to try and explain to you, as a trader, you must know what the market is doing. All I see is that the market did this break out of it, pull back a little, smash down, and now it's doing this. This is what is going to happen next. Now, the market has broken out of the consolidation. This was a strong support zone for a long time. Okay? And that would be around the 1.2500 psychological level and around 1.2550. So we're looking at that range as a zone. So which was a strong support zone. Now it's turned from support to what? It's now turning from support to resistance. So that is why we're trying to buy. So just to give you that little tip. So the market is broke out. It need to retest. It need to retest that zone. Maybe retest on 2,500 within that zone. Maybe smash a little bit higher before coming down. So let's just put it on 2,500, 1.2500 psychological level. You may say, well, price already tested that. Well, it hasn't tested the 1.2550. So it need to test that. That means 1.25500. It need to test that because multiple times it had that price action. So it's trying to do that. That's the reason for this push up. But the market is bearish anyways. As you can see, it's a bearish market. Look at that. You see, it's a bearish market. This high has been taken. We need this high to be taken. This high. You need to take out this high as a liquidity. So this is what I'm looking at. Liquidity pool right here. You need to take out that liquidity. He hasn't done it. It's going there. So you need to take out that liquidity here, which is here at this high here. And then when it does take out that liquidity, this would be a beautiful opportunity to sell right here. Okay, this would be a selling advantage. But this move is what I'm buying now. So the question is, why buy it? Because I know it's a liquidity candle. It's a liquidity momentum. It's going to target liquidity and take it out. You can see the spike already. So it's going to have one more candle. If this candle closes in, this is 4-hour candle. If this candle closes in 45 minutes, like within this range, The next candle is going to spike that up and then drop. So that's what I'm expecting to happen on this move. Okay. Having explained that, let's look at the lower time frame. I will actually go to the 1 hour to show you something. We see a break of that structure here, and this is the next move. So we can see price playing around here already. So this is a push-up, announcing the buyers coming into the market. Now, if you use your fib, you notice this. Okay? You notice this. Price actually retests. That means there was a proper retracement that happened here, which tapped into 38. That's a good retracement. So now we can see that price is pulling back up. So here is our trade. Okay, listen. Oh man, while I was just analyzing, the market just traded. That's a buy trade. Oh gosh. What? It's gone. Okay, you can buy from here now. I'm going to enter one entry because it's already moved. So I'm going to just enter buy right there. That is my buy zone. I wanted to analyze to you before telling you why I'm buying. It's already going. So there's a long position here, and we target this one, this 27, and we put our stop loss there. That's 1 to 2, a simple 1 to 2 trade. You don't need to make it hard. Just take that 1 to 2 and you're right. Now, price will get here. If you want to, you can leave it up to that level. Price will get here. But at the moment, enter a buy here and put your stop loss at 10 pips, 10 pips or 11 pips, just to be safe. We're targeting this high, but you can take profit when price get to minus 27, which is here, this price level. You can take P, you can do your TP here. Okay, you see this high where price rejected on the left. You see that? Or you can take a TP on this high, which is close to where I put the fib right there. So those are the two areas we're looking at to take the buy, to get out of this buy trade before it drops massively. So this is a trade right now. First, any question? I'm going on. Price is going up, money going, money going, money going. All right, let's go. Let's go, let's go, let's go. Let's go. This is live trade, live section. Hopefully we get up there and somebody will say, well, how did you know that price was going to do that? What about this buy? I mean, I was still in bed when this candle printed. Not necessarily in bed, but I was doing something else. So there's no way I would have jumped into this trade. Okay. And secondly, if you check the price action, it only rejected, this was the previous low, and it had a liquidity grab. So at the end of the day, no one would have predicted that the market was going to do that. So even though someone did, you can only trade breakout strategy. That's it. Only breakout strategy will work here. You know what I mean by breakout? And there was not even a retest. So let's assume this was your breakout. All right, breakout. Oh, a little bit of retest right there, a little bit, but that's all right. I hope you guys are in this trade already. So it's going because they have to take out that liquidity. I needed to go to the 4 hour to explain to you what this move is all about. That's why I went to the 4 hour to explain to you why they are doing this, why the market is going in this direction, and why I chose, or I'm choosing to buy. Though it's a sell market, but the market decided to buy this morning because I just did an analysis showing you from the 4 hour time frame why that is. it's so important to understand that movement in the market, understanding, you see, in your own experience, you want to know what the market is doing over time and where they intend to go. So it's so important. You have to learn that. So while we're looking at this trade and you have your stop loss there, remember, not all trade is 100% guaranteed to go in your direction. But you have to learn. You have to learn to manage your trade and risk what you can afford to lose, which I'm going to talk about in a moment. Risking what you can afford to lose. All right. If you have any question, you can ask. I'm here. Raise your hand or type it in the comment section. But at the moment, while you are in this trade, for those of you who are able to get into this trade, while you are in this trade, watch out for when price close above this 38. Obviously, I'm expecting them to break this high before any retracement again. So I'm expecting this candle to push and break this high, and it's just gonna be nice if it does that. Okay. So, but if you have any question regarding what I've explained so far, ask now. For those of you on YouTube, you can also ask if you have any question in the comment section. All right. Which is okay. No problem. No problem. Okay. Now, while they were looking at the trade, and I've already entered. I entered the trade immediately. I saw that candle pushing up here. Remember when I said enter? The candle was pumping here. This is when I entered the trade, right here at this level. So you can see without any drawdown, it's just pushing up. Why? Because they're already here. They told you that they are coming. They are in the market already. You can see that the buyer said we are here already. So your only just to take your edge, get something out of it. It's not like you must catch the entire move. You're as a trader, you're looking at opportunity to actually take your share from the market. That's all. It's none of your business why this one moved. Oh, you should have caught this one. No. Are they still going? Do they still have a direction that they are going? Do you know where they are going? Do you know where they are taking price to? If you know, that is your edge. Then find an entry to join them. That's all. And you find an entry to join them and you're in. And you just wait for the trade to get to where they are going and then you get out. It's as simple as traveling from one point A to point B. Okay. That's the idea. So this is one of our strategy that we trade. This is not I'm gonna show you a trade recap for the week that the trade we took for the week so far. We took SP 500 and GU trade on Monday, and on Tuesday we had TPs. On Tuesday morning we have TP. Actually, GU TP was in the night. I left it until it hit my TP in the night on that same Monday. I think Monday or Tuesday night. That would be early morning on Tuesday night. Tuesday, that means Monday stroke Tuesday night, you know what I mean? So that means you could say Monday night. That's fine. That's when I took TP. But SP 500 hit TP right in the evening before 6 o'clock in the evening. We had TP hit. Somebody asked a question here. For those of you who have a question, please put it in the comment section. Are you a prof? And oh, as your prof responded to you about the queries regarding the consistency rule? Is it now you're asking that? That's many years ago. Where have you been? Oh, this is that was many years ago. many years ago. We'll talk about prop firm in a moment, but let's look at this trade. Let's see how this trade play out quickly. All right. Don't be carried away. I don't want us to be carried away. Let's watch this trade. Let's see. We're going. And if it breaks, we want price to break above this high. Remember the first TP is here. So don't be greedy. That's 1 to 2. Immediately price get to 1 to 2. Don't be greedy. Take it. Or break even. Or take partial profit. And I'll just explain that. If you have, let me annotate quickly. Let's say you have $500 to trade with, and that's what you're trading with, and you risk $50 on this trade. You're risking $50. Okay, that's what you risked. So you now have $450 left on your account. Right now, you should be in profit. So now with this, the lot size determine what you gain, because you need to know what percentage is this. What percentage is 50? All right. You need to know that. So that is obviously 10%. So that means you're risking 10% of 500, which is your risk. So what that means is, if price come to your TP now and give you 2%, I mean 1 to 2, that is 20% in profit. So that means you will be making $100. So your balance will end up with 600. You started with 500, you risked 50, and you got 100 back on it. So I mean, you got 50. That means 1 to 2. Remember, it's 1 to 2. 1 to 2. So you risk this and you got 100. So that would be 600. So that's what it means. But if you want to take partial profit now, instead of taking all the 100 out of the market, you can take $50 to gain back your money. So you now have balance of 500 because you just took your risk out of the market. So you took partial profit. So you can take $50 out and leave the rest $50 and break even. Break even means that you move your stop loss into your entry or above your entry. Once you do that, you have done well. So you're not trading risk-free. Now, even though price retrace and hit you on the break even, you already make your $50 back. So you didn't lose anything. You just broke even. Okay? You just broke even. So that's the idea. But if you want to take more profit, you can. You can decide to take 70%, $80 out of the market. You can decide to take $60 out of the market. You can decide to take, instead of taking 50, you can decide to take $90. So when price retrace and come hit you, you're not like really bothered, because you really made 70, you made $20 on top, or $30 on top of your $50 risk, or that dollar on top of. Do you understand? So you must learn to manage your market, your trade like that. Very important. You must learn to manage your trade that way. Very important. So if you have questions regarding that, ask now. If you don't understand that, because a lot of you don't know how to manage your trade, so you just leave it until hit TP, and you think you are the one that owns the market, or probably you work for the so you just leave your thing and expect things to be, it doesn't work that way. You see, if you don't take profit, you lose. And do not, when you set your stop loss like this, do not quickly move your break even before price, give you opportunity. Let me explain that very clearly. Let me wipe the screen first so you can. Firstly, you can see what's going on here. Okay. You see what's going on here. All right. At the moment, if you enter this trade, when I said you should enter, you are now 1% up. At the moment, you should be 1% up. That means you just made one to one. This is 1-to-1 already. If you enter the trade, you just made 1-to-1. That means if you risk $50, you just made another $50 right now. So this is risk management. At this level, don't be greedy. You can decide to take your profit and leave. Or you can decide to break even. Or you can decide to take partial profit and leave the rest to run. That is on you. That is actually on you. But you have to make up your mind that that's what you want to do. You make up your mind. And once you keep trading like that and mastering the trading system like that, you will discover that you'll be profitable over time. Forget about those gurus who will tell you, I hit 1 to 5, risk to reward, 1 to 10, risk to reward. That's not your journey yet. You will get there. But at the moment, learn to take little profit that the market gives you and walk away. Learn to take it. Or you break even, or you take partials. It's better than having trade retrace all the way down to take you out, which most of you experience all the time. They say, oh, I just came back, you hit me and took me out. Okay, well done. Well done. It does happen. Well done. But learn. You must pay your school fees. You have to pay your school fees in the market. It's very important. We all pay our school fees. I paid my school fees and many times. So I can tell you, take money, take it. Don't leave it for take money. When the money comes, take it. So the first place I'm looking at of taking money now is here. So on this -27. Remember, I already marked it out from the 4-hour time frame. I told you where we're looking at, where they are going. I told you they are coming around this zone. This is 12500. Where is it? This 12500 here, right there. That's the high I'm expecting them to come to. So when they come there, if they choose to push higher by tapping into the 4-hour what do you call it, support becoming a resistance, and they reject from there, I'm going to sell. So I'm going to sell from there. That would be somewhere around here. But at the moment, I'm looking at them getting to this -27 and then giving us another pullback. But I will get out from that -27 on the fib, then I'll wait for that pullback to happen. So since they break this high, that will give us a structure. So they created a new higher high, and then they might come back. So that retracement might be longer and then tap into your entry. So if you didn't take profit there, you might lose. You see, you might lose. So you wait for price to come back and then enter again if they try to go back up. That's what you do. So how many of you in profit now? Share your profit. If you're in profit, share, screenshot and share, or type it in the comment section. You're in profit on this trade right now. You are in profit right now. Let me see. Tap. Comment. Let me see in the comment section. If you have not hit the like button on my YouTube, man, you are wicked though. It means you don't like this thing at all. Hit the like button, bro. Hit the like button. You're watching. Hit the like button. Let's make order known. Okay, let's see. My, nice one on GU there. Look at that. I'm flipping this small account and it's already $15 on it, on a small account, from 175 pounds, and is now 190 pounds, almost going to 192 pounds. And also on my big account, I'm in 120 something dollars already, and that is also going up crazy, and that's nice. So let me see. I was actually concerned about flipping the small account actually because I'm flipping that for the weekend. So be able to buy something for my kid. When I'm flipping it. So flip it to like 300 and withdraw it. I just started trading it from 100. So it's 170 something now. So we have to take it to 300 this week. Hopefully, if not, whatever we make. Come on, come on, come on, come on. Break this high, break this high. That's 7. Yes, let me see how many of you have made profit. No one. Huh. You're in profit. Okay, Darren's in profit. Lucky is in profit. Who else? Who else in profit? Who else in profit? Only these guys? Let me see the YouTube channel. Okay. All right. So come on, come on, come on, come on, come on, come on, come on. I like it when it's blue, but don't be carried away. Don't be carried away too. Don't be carried away. Come on, come on. Don't reject that. No, 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 no. We need to break above the high. Come on. We need to break above the high. It's good that you are in profit. We need to break above that high. Come on, come on, come on, come on. We need to break that high up. Break, break, break. Break above this fib level. And we just need a little push up. We need a little push up. Okay. While you're doing that, let's talk about risk management. So let's talk about risk management. This is a general class, so you can ask questions. There's a site I want you to go save. It's called cashbackforex.com. You will be able to use their lot size calculator for any pair, commodity, indices, as long as you know the opening price that you're targeting to trade from, as long as you know your stop loss price, they will give you, and also as long as you know the contract size. Some of them are automated for you. Others you have to find it yourself by using your MetaTrader. Go to click on the pair or the commodity or the indices, click on it. That means you right click on it and then you go to specification and then you'll be able to see the contract size of that pair and you put it here or commodity. Now, the trade is going up. So just put your, I know, okay, let me allow us to do this. Let's finish this trade before we do this so that everyone will be able to benefit from it. let's see how this trade play out quickly. I'm taking my TP here at this level. That's when I'm taking my TP. I'm taking just 1 to 2, 1 to 2.3, which is okay. And because I entered a little bit late, that would give me 1 to 2, somewhere around here, which is fine. This is where I entered. That's 1 to 2 as well. So it's also fine. I entered at that level. So 1 to 2 clean. And that will be all right. And I will talk about risk management. Any question? Any question? Obviously, we can see that price has, broken structure. Okay. And if it closes there, it means that this high has been taken out. They may want to push higher a little bit before coming back down. Okay. But ensure you do your take your profit here. Don't be greedy. And as at this level, immediately you see price playing around here and is acting. Don't waste time. Close out and leave. Nice break. You see, nice breakout there. That's a very good one. Nice breakout right there. Nice breakout right there. If you're watching us on YouTube, hit the subscribe button. You know what? I wish I can do live trades all the time, but it's time consuming, trust me. You have to be scalping to successfully do live trades, a live trading section. You have to be scalping because it takes patience, it takes time. So if I was going to trade, it's because this is one of my scalping strategy. So where I can go to a lower time frame, like 15 minutes, as you can see on my time, 15 minutes is the list I have there. My timeline. Once I go there, I know I'm getting entry and I'll take it, watch out for the candle to get to the levels I want it, and that's it. Now, some of you will be okay with this price right now. You'll be okay with what price has done and get out. You'll be okay. But nevertheless, this is a beautiful structure. The market just gave us a beautiful structure. We have this price push up. Let me change it to Gunbox order video. So we have price push up, and now this high has been breached. Okay, we have that bridge on the high. It means there's a break of structure because the candle closed above it. So what that means is price can still continue with this now order flow. This is now a new order flow that is going on right now. So it could decide to come up here, but it is a new order flow. Until there is a candle retracing, the order flow is not complete. So this order flow was my target, which I'm going to target this order flow and now take my share. And that's what we're trading right now. My students already know what I'm talking about. If you're my student, you know, you have an idea of what we're talking about. So I'm still expecting price to just do one push-up, one candle push-up a little bit. And if it start retracing here, then we should look for a new order flow. We should look for a new order flow. And then that will be somewhere, depending on where it retraces. Maybe from here, it will not retrace again, depending. Let me show you with this fib. So assuming we have this fib and price retrace somewhere around here or something, and then the next order flow will go up. Any question? So I'm expecting them to react to this level. Okay. Now this is exactly what I'm talking about. If you hadn't take TP there, if you don't know how to be patient and you didn't take TP there, all of this will smash all the way down. Now they may come all the way down here before going back up again. That is exactly how they trade this pair. So that's it. The candle is still, we have 10 minutes on this candle. Don't be afraid. Just relax. It's 10 minutes on the candle. It can wick all the way up again. So it can wick all the way up. It might close all the way there, but you still have a lot of time, 9 minutes on this candle. So just watch. Until the candle closes, there is no decision yet. You can't say, oh, it's going to start retracing now. No. You have to see the candle closes. Let's see how it looks like on the 4-hour. Did you see that? We have 7 minutes left. 7 minutes left on this 4-hour candle. Did you see how bullish it got? So the next one possibly going to go up easily and then reject at that level. So that's why we're targeting that zone. So you see, but this was the move that was announced by this structure broken. They took our liquidity, and I knew that this is where they're going. So immediately this high was taken out, I knew that they were going to go higher. So you just need to know what the market is doing to be able to buy or trade or sell, whichever it is. But I am suspecting that the next high that they're going to take out is this one. And that is our TP1. TP2 is where we tagged the psychological level of 1.2500. Okay. So we have price action there. 5 minutes more on the 4-hour candle, 5 minutes more. So we have 5 minutes on this candle as well. Let's see what happened to it. Yeah, you're welcome, bro. The sellers are interfering. They're angry. And said, these buyers want to take over the market. The sellers are interfering now. But we already break a high, so which is nice. So it's going to continue up. We broke a high here, which is very good. You know what they are doing now? They are eating into the profit of many people who did not take profit after the break of high. So it happens. They are eating into the profit and then forcing people to close their trade, which is absolutely unacceptable. Don't do it. You have a stop loss. So this is where greed also plays its role. This is where greed plays its role. This is where some of you start saying, oh, bad old man, I should have closed my trade. Why? And then you beat yourself up. But if you don't understand the market behavior, you will not anticipate this one. You will not anticipate it. So they are forcing people out to close their trade with this push that they just did. There's a force. You can see the way it's dropping. They're forcing people out. So the sellers are pushing price down strongly. Why? Because on the 4-hour, it's supposed to be selling, not buying. So it's changing momentum and they're trying to force price down. But it's still very strong. So we have 2 minutes more. The candle is still very strong. So it doesn't matter what they do. This high has been broken now. As far as this high has been broken, the next high will be the target of this next 4-hour candle. So when you look at that, you say, I see. So whatever they are doing on the smaller time frame, your heart is not moved. You just wait for an opportunity to add more entries, more entries, more entries. And that's what I'm waiting for here. I'm waiting for an opportunity to add another entry. And it will soon happen. Watch. We have 1 minute and 20 something seconds left. One minute for the candle to close. So that 4-hour candle is bullish. That 4-hour candle is bullish. That makes sense. So from 10 o'clock, we should expect price to push between 10 and 12. We should expect price to push to our mark of TP before it sells. I'm expecting price to sell massively New York section. Okay, we have a closure. We have a closure now. So the next thing we're looking at is another order block. Watch. Let me show you what they're doing here. Let me put the fib so you can see what they're doing here. Some people's hearts is just beating fast. Look at that. They need to fill this imbalance that they created and tap. Even now, they just rejected at 50, but we want them to reject, get to 61, even somewhere close to your entry. Now, let me remove the previous fib so you can understand it. You see? So they're here now. Okay, that's 50. I'm expecting them to tap into this entry again before they reject. So that's why this candle, which is 13 minutes time, is still dropping like crazy, because I told you that they do this. They do this all the time, most of the time. Once they break structure, they will come back to your entry. Remember, I said it earlier. If they break the structure, and I said you can take profit there if you want, but watch out, they're going to come back to the entry. Somewhere around there, they will pull back. They will create a pullback. And which they have done. They are doing it now. So it's 50, it's rejecting at 50 point on the fib. But I'm expecting them to tap into 61, because that's where a lot of people had break even. So they know that a lot of people have break even there. So by the time they tap into that 61, remove their break even, then they can begin to rally up again. And most people will add more entry here at 50 or 60 to have, depending on what you're risking. For me, it's not about stacking trades. It's about understanding what you're doing. It's not about stacking trade, because you can stack trade and lose your money. So it's about understanding the market first, knowing what the market is doing, so that you'll be able to know that, okay, I'm supposed to stay in the trade. I'm not supposed to stay in the trade. All right. And then once you understand what the market is doing, it's easy for you to trade with that mindset, with that perspective. All we want to see that this candle close bullish. If this candle, 15 minutes candle close bullish, and then we have a very clean opportunity for price to go up. We want to see that this candle close bullish. That's all. There's still a lot of time. 11 minutes is long. It's not short. 11 minutes is long. So you wait until the candle closes. If the candle does not close bullish, then we know at least it rejected. There is a wick. So it must leave us a hammer. Worst case scenario, we need a hammer or doji. We want to see that, a rejection, massive rejection from this zone. So telling us that the buyers are putting pressure in to come into the market. And when that happens, then you know. Like I said, this may not be the worst place that they want to tap into. Remember that they may tap into 61 before the final rejection. But if they reject at this 50, there's nothing wrong. It's still a good thing. All right. But let's assume that they want to go lower. They can tap into the break even, which is at the 60 here, at 61 fib retracement. And then when they tap into that zone, they will rapidly, push up. But they haven't done that yet. They're still rejecting at 50. So we can see price is pumping up and down at this level. Which is obviously telling us that the buyers are planning to get into the market back again. So the discount is over. Ask questions. Ask questions. Some people can't withstand this, and you want to be a trader. There are some people who think that trade should just be one way. Let it just go up and hit my TP and come down, and I'm done. Let it just go down and hit my TP and I'm done. Yes, exactly, boss. Do you do this often? I wish I can. It's not easy to do it. Boss, how do you make the entry? How do I make the entry? Okay, you missed our entry time. No, just watch. Watch what's about to happen here. Let's see what this candle do in 9 minutes. It's still a lot of time. It's 9 minutes. It's a lot of time. Let's see what they do. Those of you on YouTube, let's see what's going on YouTube. What do you say? I took the GP and also, okay, Josh just took GDP and that. Okay, let's see the Euro USD. I didn't look into the Euro. I just wanted to focus. Beautiful, beautiful. Look at that. Beautiful. That's it. Beautiful. And they tap into that high. Beautiful. Beautiful one there. Nice one. It's just the same. It's the same. Beautiful. Well done. Well done. Ask your questions now, because after this trade, it will be another time. Okay, let's look at the comments coming in. How much to be a student? To be a student, how much student? Depending on what you want to do, you can take my course. You don't need to meet me. But if you want me to mentor you, that's another thing. You can take my course. Visit our website. Let me show you. Actually, I should have put the link in the description. So which pair are you analyzing? GDP USD. I'm analyzing GDP USD and I'm trading it now. We've been on it. If you're watching us on YouTube, you should hit the subscribe button, please, and hit the like button, because that's the only way you can get to receive all this information for free. You receive a live trade alert, and any video that I post, just turn on the bell notification. That's all. You'll be all right. Just go to the live stream video now. Go to the comment section, the how do you call it? The description section. You will see all my links there, all the information you need. Just follow it on this live stream on YouTube. For those of you here on Zoom, I wanted this candle to close bullish. Oh, how I wanted this candle to close bullish. How I wanted this candle to close bullish. I wanted that candle to close bullish. I wanted that candle to close bullish. You haven't dropped. Okay. Yeah, for everyone, this is the link on the Zoom. You can go there. That's the link to the website. My courses are there. You can take my free course. Let me even put it on the let me put it here so you can see it. You can take my courses there. I have free section, free courses for you. For those of you starting new, take the free one. But if you want to know my strategy that we trade right now, take the course. If you want mentorship, then you can get in touch with me one-on-one. All right, this is where you're coming to. And sure, and there are some of you that you open the web, you open this website, it doesn't open up. It's because in your country, probably you're restricted from the domain. So you use VPN. If you use VPN, you'll be able to open it. Now this retracement needs to be over. We want this retracement to be over. This is a retracement. We want it to be over. Let's see what's going on the 4-hour. Yeah, this is expected. At least a break and a retest, a pullback is expected. But I think the next candle, this candle will close eventually bullish. So I'm not sure how quickly it's going to rise. Let's see. Do we have news today, guys? Do we have news? You know what? I've not even checked. Forex factory. Today, okay, we're good. We are good. We're good. CPI already done its job this morning. Oh, so that push-up was CPI though. Is it? I didn't even notice. So until 5 p.m. today, we're good. So this push-up was caused by what? Really? So this one was a CPI though. Oh, I didn't even know that. Because normally it wasn't supposed to be like pushing up crazy. So the news really did its job. Now, this is what a lot of people don't like in trading. What is going on now, right? Oh, I should have just take my profit and leave. It means you're a scalper. Just scalp, get in and get out quickly. But if you don't want this or something, if you want something that will lead to a profitable trading, you have to be patient. Patient is the key. You know, if you not close your trade here, why did you wait all this time? Why did you wait? You should have just waited, let the price come to your stop loss and take you out. But the truth is, I was analyzing the whole process before this happened. And I told you what to expect. I said you could take profit at this break of this high. That's why I drew this arrow here. I said that will give you already 1-to-1. Or you could take profit immediately this high is broken and close, which was here. You should have taken profit if you couldn't wait, because they would definitely pull back. Your own is to learn to be patient and understand that the market will always pull back. It doesn't go straight up. It does this. Look at that. Somebody that bought here earlier would not be expecting that this one will pull back. There was a pullback. And they continued. And now, how did they know that, how did you know that they will continue? They continue by breaking this high. If they have not broken this high, I would tell you, get out of the trade. If they have not. So that's the place you have to learn something. Learn. It's called market structure. Understand it. Since they broke this high, this is not new higher high. As far as this trade, this movement is concerned, this is not new higher high. So this pullback is called retracement. They retrace the pullback. So they are still going to continue to create one more higher high. The only reason that it will not work is when price push up to this level and fails to break this high and then consolidate. I'll tell you what, get out. It means they're coming down. You see, if this high is not taken out, that's the only thing we're waiting for now, for them to take off that high. If they don't do it, and we see that they are struggling to do it, they get here and they fail to break this high, and you see price rejecting. Take your profit and get out. That's it. Let's see how this candle close. Let's see your comments. No comment here. If you are still here on the live stream, it means that you have patience. You're patient. You're patient. Maybe I may have encouraged you to be patient, but that's what it means. You're patient. You're patient. You're patient. You're learning to be patient. Just join. How are you doing? Good, good, good. You're welcome. Welcome, bro. You're learning to be patient. Learning, learning, learning. Here we go. Here we go. Let's go. Candle close bullish will be nice. If this candle close bullish will be nice. If this candle close bullish will be greatly nice. If this candle close bullish will be nice. Got 4 minutes left on that candle. Let's go. Let's go. Push. Oh, did I move my... Oh, it's like I moved the... Hold on, guys. I moved the entries. Let me see. We should stick to the entry plan. Is that? I think that's it. I'm not sure. Let me see. Okay. Yeah, that's it. I'm looking forward to price getting here. 2 minutes left on that candle. 2 minutes left on that candle. 2 minutes, 28, 28, 28, 25 seconds, 20 seconds. Hit the subscribe button if you're watching us live on YouTube. This is how we trade. I'm just showing you how I live trade. This is my live. This is how I trade. So this is live trade section. And we already got in on this trade. We entered at this level, at this price level here. That's when we entered the trade. And we have a first breakup structure. Now this one is rallying up to break the second structure. So hopefully it does. So hopefully it does. All right. Hopefully it does. So we don't know yet until the candle closes. We want the candle to close bullish. So let's just hope it gives us what we're expecting. Remember, we did not start from 15 minutes. We started from 4-hour time frame. Remember that. Always remember, we started from 4-hour time frame to look at the behavior of the market. And I told you that this is one of the reasons you can counter trade the market. You have to know what is going on in 4-hour to be able to do a counter trade, because the 4-hour is bearish. It's strongly bearish. But why are we buying? Because we observed. There's a shift, okay, in momentum. We observed that the market was going to go back and retest the support that it broke through to form a new resistance. So it had to form a new resistance to be able to come back down. Remember that. That is the reason we decided to say, okay, since the market is intending to go up to go and retest that support to become a resistance, then we must buy along with the market. We want to trade with them to get there. That's why we're counter trading it. And then we will sell exactly the price range that we expect them to get to. And that's the reason for that. I'm not going to go over it again. I've done it. Someone is asking. I'm not going to go over it again. No. Just watch the video once we finish, okay? Once we finish, watch the video again. That's why it's on YouTube. So ensure you watch the video once we finish. Everyone, if you came late or you're watching the video now, where we're looking at it now, ensure you watch the video from the beginning. Yes, it's a long one, but it will teach you a lot. It will teach you a lot, especially if you're a beginning trader or one who is always afraid of retracement, pullbacks, behavior of candlesticks. You don't understand them. You got to watch this video. Watch it. So ensure you hit the subscribe button. Turn on your bell notification so that next time we come up, you will be one of those who will benefit from it. And I often do daily analysis, trade setup. If you want to join the daily trade setup here on my website. Join here. Once you join, it will take you to the Telegram group. It will ask you to join a Telegram group, private Telegram group. And once you join there, every month, you're supposed to pay that. That's very chicken change. I mean, depending on your account size anyway. If you're already on this trade, you would have made that money back ×3, depending on your account size. Again, depending on your account size. If you're trading less than $50, I don't think you should do this. If your account size is less than $50 or less than $100, I don't think you should do this. Because just save your money. You don't need to spend that money because you need an account that can give you the money. You need at least in one trade, you will make the money ×2. That kind of account. Everyone should be smart, innit? You can't just come to join an analysis group and then you're paying 30 quid and you're only trading maybe $200 account, $300 account, or maybe even $100 account. How are you going to make money? It's just to think. How are you going to make money with that? So if you're coming in and show you're trading, probably you have a funded profit account, a minimum of 10K. If you're trading your personal account, a minimum of $1,000. Period. So profit, a minimum of 10K. Personal account, a minimum of 1K. So if you have that, then you're qualified to take any of these. Take the daily, because you make just one trade. If you do one trade, 1% of $1,000 will give you 100. Sorry, I'm not sure how you trade your $100. That's again another trick, because if you only risk 1% on $100, that's about $10. So how are you going to make money? So anyway, one trade, depending, two trades, in a way, you'll be able to make your money back in a week. So you leave the rest of the month, actually the rest of the weeks of the month, to be able to trade and be successful in the process. So that's understandable. Yeah. So you can still do it. So let's say out of the whole month, you're able to catch about 5 trades in profit, or 6 trades in profit, or even 10 trades. Let's say you're able to catch 10 trades in profit, 10 trades. Out of the 10 trades, you had 7 wins and 3 losses. You will still be strongly profitable, heavily profitable, heavily profitable. So, which is a good thing. Okay, so that's why I recommend, if you want to join the daily trade analysis setup that I do every day, that means if you join that group, I'll look at trades every day. I'll send you what I'm looking at to trade. And I do both swing trades and day trade setups. So if you come in there, then the first thing you want to see is you must have an account that is sizable. A minimum of 10K, profems. Of course, I think that's the minimum that most of them have. I know some that have 5K, but depending on what you can afford. Depending on what you can afford. Depending on what you can afford. So a personal account, like I said, I'll suggest a minimum of 1K. If you have a minimum of 1K to spend, either in dollars and pounds or whatever, then put it there. And then sign up for this. Okay? If I lose, you lose. You know what, guys? Close your trade. I don't like what the market is doing anymore. Close your trade. Close your trade, everybody. Close your trade. Close your trades. Yes. I don't like this. It's still going to go down a little. So if it does this, then it's failing to break this high. So it might consolidate a while. Close your trade. It's a learning curve. Did you learn anything today? Come on, guys. Did you learn anything? Tell me. Hit it. Hit it, hit it, hit it on the comment section. Did you learn anything? That's the reason for live trade section. It's not about making millions. It's about learning the skills that works, and then how you can manage trade. This is called trade management. So why did he close out the trade? You didn't know what I saw. I saw what I saw. I know what I saw. So what did you see? Don't worry about it. Get the training, you know. Let me just show you what I saw. First, if you turn the line chart on, you will notice that price have here a structure. Okay. It has a structure here. What do you see? Okay. Head, shoulder, shoulder. So it has shoulder here, head here. It's forming another shoulder. All right. And if you didn't close out on your trade, you would have been on this drawdown now. You see? Did you see that? Did you see that? Did you see what just happened? Good. That is the learning curve. That's why live trade is so important. When you have the section to learn how to trade with someone who knows how to trade and you're trading live, you learn a lot. So watch this video again and again. Again and what? Again. Remember, I told you that it's a sell market. But we're trying to buy the market because the market is going on a retracement to the upside, but it's struggling. As you can see, the buyers are being fought by the sellers. The sellers are saying, this is our market. Otago, get out. We don't need you. So we just watch. It's funny though, but is now in consolidation phase. So you see, I found the phase to break that high. So it's giving us head and shoulder. The shoulder, head, shoulder. That's what I see there. This is shoulder, head, shoulder. So what do you think? He wants to come down. He wants to come down, but he may struggle. But the buyers are giving up already because the sellers want to come in. So for that reason, be careful. I'll look for a good setup again. The setup has been messed up already. The setup has been messed up already. So we are not looking at any more trades on this pair right now. Guys, the setup is already messed up unless we have a break of structure to the downside, we are not selling. So we need to see. So let me just remove all the drawings now so you can see the market have shifted. It broke this high. This would have been a very good place to take TP. But you see, we are able to come back up here a little bit to regain our profits more. A little bit of profit was regained, which is good, before price rejected. So I noticed that it was struggling to break this high on this next candle, and eventually it dropped. So you say, well, we should have waited for the candle to close. No, you have to see ahead. That's why if you check my videos, it's all full of technical analysis because that's my expertise. That's the way I trade. I had to learn the ropes. Learning technical is key to trading. So that's why I do technical analysis, weekly forecast, daily forecast, daily trade analysis. That's why I say join my daily trade forecast. You'll be able to cash trade like this. And I think what I'm planning to even introduce to the daily trade community, I'm looking forward, if we hit 100 people in membership, I will introduce live trades. So that means if we can go in there, everybody in there can come live together with trade. We'll look at setup, we'll do analysis, we'll look at setup, and then we'll trade for that day. Or maybe we might do it daily, we might do twice a week, depending if we have setup. I'm working on that, but I'm looking for a certain number of subscribers to come in, at least 100 people. When we have 100 people in the group, then we'll do that. I'm talking about the daily trade analysis, and then we'll include live trades. That is going to be mind-blowing. In fact, many of you will learn how to trade. You'll be so confident in the long run, and you'll be happy that you learn these things. You get what I mean? And give yourself weeks and months. You'll be better off instead of just trading in isolation. You want to trade with the community that is actually doing live trades. And that is what I'm planning to introduce to the daily trade analysis group. Not now, those of you who will do one-on-one mentorship with me, you will be given access to that. You will have access to that. You'll be able to join me on a one-on-one. But those ones trading the courses, you bought the course, just learn. It's about learning. The course is just there for you to learn how I trade, how I look at the market, and most of the recording were done with my mentees. So you are going to get a lot of information. A lot. When I trade with my mentees and teach them, I release myself. There's so much I give to them. So those videos are there. You will learn a lot. Okay, any questions, any comment? This is how scalping work, guys. This is how scalping work. Don't force it. This is how scalping work. You don't have to wait. If you're swinging the trade, you don't need to look at the 15 minutes and be waiting for price to. No. We're not swinging the trade. We just capped. We just capped. Okay, we just capped. And that's what we did. Now, price might eventually go back up, but no, until we find that this structure is broken, we're not doing anything again. So it disappointed us for not breaking that structure. If it has broken that structure, then we thought, okay, fine, let's go higher. But it struggled. So as long as it struggled to break that structure, we do not trade it. We leave it. Okay, that's a rejection here, a break and a retest. So there was a break and a retest. That's what I was supposed to let you know. That's what I saw. Because if it hadn't broken down over to the structure, this was a support, a resistance. And then price came up and then it's supposed to use it as a support and bounce up, but it failed. So it broke through it and then came back to retest. And that is why I noticed it was struggling to break above it. So I said we should close. And immediately I asked you to close. What happened? You have this massive smash down. So it happens. So it's also creating another structure here now, which is a little bit of structure here. So this is consolidation phase. Now, if you break this one low, push or break or just play around there, don't worry about it. There's no more setup here. We need to look for another setup to trade. So let's see. Let's take some questions on risk management. Do you want to take more risk management or should we end this live stream quickly? I need a comment in the comment section. Do you want me to teach on risk management quickly or another live setup trade? Somebody say another trade, please. Your own is just to make money, isn't it? Learn. Come on, learn. I'm having my breakfast here right now. Because I stay on the chat most of the time. So, and I eat while I'm on the chat most of the time. So that's how you improve yourself. You put yourself in, soak yourself into the skill. Learn the skill, learn the skill, learn the skill. Soak yourself in, and you get better. That's it. Okay. Now, remember I talked about two strategy majorly that I trade. This is just one of them. And this one that I just traded here, it can be traded on a swing trade setup. You can do swing trade on it as well. But there's one that is very, very straightforward to the point. It's called the Fractal X. If you go to my trading my account, you go to my course. Somebody say I can't access your website in Nigeria. Yes, you have to use VPN. If you have to use VPN to access it, most of you in Nigeria are finding it difficult to access it because the platform may have restricted your country. I'm not sure. You need to check on it and see. Okay, but if not, use VPN. If you use VPN, it will take you through. I mean, sorry, it's just what it is. It's the country. The country is messing up most businesses. They are messing up. Actually, the banking system is destroying the businesses, international businesses, frustrating international businesses to do business with Nigerians. It's crazy. And it's also a good opportunity, though. It's a good opportunity that Nigerians cannot think of their trading system. They can think of a system that works, a payment system. Of course, they have a lot of payment system now. They can think of a course system, programs that can suit Nigerians. For instance, I think there's one they call Sell It. Is it Seller? There's a program that calls Seller. Because I'm not in Nigeria, I'm not a Nigerian. I'm a Nigerian. That's what I'm trying to say. But I'm not in Nigeria. So I'm finding it difficult to really set up a business on that platform to start. But I'm looking towards it. I might be able to do it later. Then transfer my courses there. Then those in Nigeria can just go there and do it. So I'm working on that. So I can already see that the Nigerian market is struggling to even. There are some websites that are shutting down against Nigerians. Really, even most pro firms are doing it. Some pro firms are shutting down, but there are still pro firms that Nigerians can still trade on. But all you need to do is just use VPN for now. Use VPN to do it. Discord. I have a Discord group. It's just that it takes a lot of work and time to do it. Nigeria is against the world. This one is Nigerians against the world. That's good, lad. It's a terrible experience though, but it happens. The Discord, I have a Discord group, but I've not been. I actually created it for my mentees. But because I changed my mentorship program. The ones I'm having now is the last group of mentorship program that I do yearly for year. All right. So these are the last set. So that's why you see I've not been announcing mentorship. Otherwise, you would have been seeing me say join my mentorship. I didn't say anything about mentorship. But if you want to join one-on-one mentorship, that is different. I do one-on-one. So I focus on that person 3 times a week. We have a class, we talk. You have access to me anytime, any day. You can call me, you can send me a message, you can ask questions, and then I'll give you time frame. I'll guide you on how to trade from demo, challenge account to live account, and you must follow rules, follow steps. Don't try to jump the gun. Don't try to create. That's why it's called mentorship. You just follow rules. Follow. If you follow rules, you won't get burnt. You can't trade. You can't go through my mentorship and begin to blow accounts. If you do, it's because you're not following rules. You see, you can have a respectable parent and then the children are wayward, or the child is wayward because the child refused to follow rules. There are some children like that. They just refuse to respect rules. And then what happened? The economy, the harsh environment will humble them. You see. So that's what it does that's what happened about trading as well. So when we talk about trading and you're being mentored, follow rules. Don't jump the gun. Follow rules. Don't try to be smart. If you do, the market will humble you. Follow rules. Can you show your student how to look for a new setup? You are not my student, that's why you're asking. Can I get in the mentorship that you're running now? Not one-on-one. I'm trying to get as much as education from you. Well, that's the thing. I don't run that. I only run one-on-one at the moment. But forget the fact that I tell you one-on-one, you must have. Listen, it depending on what you just getting. If you're interested, get in touch with me, depending on what you want to do. But personally, one-on-one is the best. Just go for it. Follow who know road though. SP Finder. It's true, Jerry. You see what's going on? Struggle. We'll be trapping here and we want to, what's going on? What's going on? Okay, let's talk about risk management quickly. Let's move that away. Let's talk about risk management. Now, risk management is very important. I can't overemphasize it enough. You got to know how to manage your account. If I give you $1,000, I'm expecting you to multiply that $1,000 over time as a trader. And if you cannot multiply the $1,000, something is wrong. It means you haven't learned the skill. See, trading gives you the opportunity to multiply money. You see, that's what trading does. It gives you the opportunity to multiply money. Write that down. Write that down. It's very important to understand it. Trading gives you the opportunity to multiply a dollar, $10, $50. That's the skill you're trying to learn. But many of us are failing at it because we don't have the right mindset of risk management. And we allow greed greed to take steps and make the dictates for us. You see, some of you just made money now. When we traded, you just made money, right? Why? Because you followed instruction. You were able to follow. You were following a guide on how to. So you started with $5, for instance, and then you ended up closing out with $7. If you did that, you just made $2. And that is multiplying money. You just made $2 in less than 2 hours. You make $2. I'm just using that as an example. So let's say you started with $100 and you close out with 200. As in, you closed your trade and you made another extra $100. Look at that. You just made 100% of your investment, of your risk. Your risk, I'm not talking about the capital, the balance. I'm talking about the risk, what you risked. That is understanding trade. Let me put it in a simple term. You have a $10,000 account. This is $10,000. Okay. This is what you have in the account. The question is, what do you want to risk? That's what the market is asking. You must have something that you're risking. You can't risk everything. That's gambling. You have to create a reserve. And when it comes to what you can afford to risk, you are looking at first what you can afford to lose. Okay? What you can afford to lose. You have to look at what you can afford to lose. It's very important. Look at what you can afford when it comes to risk. What can I afford to lose? So out of this now, what can I afford to lose? I'm looking at, can I afford to lose $100? And I'll be all right. So if I can afford to lose $100 and I will be all right, that will be my risk. So I will enter the market with $100 out of these 10,000. So my balance will not be left with what? 9,000. Sorry, 9,900. Okay? You now have 9,900. That's a lot of money still left. Let me do it right. Okay? You still have a lot of money. Don't mind me. 9,900. You still have a lot of money. You only took $100 out. So that is risk. You must understand that. That is what you're risking. That is your risk. Okay? So it means you are willing to lose $100. You see, I'm not talking about how much I'm willing to make yet. So when it comes to risk management, you're not looking at what you are making. You're looking at what you can lose. Write that down. Write that down. Most of you didn't know that. It's a common thinking mentality in financial trading. And when you begin to think like that, you are ready to reserve. You're ready to make money. How much do I have to risk in this business? What can I afford to lose? When you are getting into a business, don't start a business because of what you can make. Start a business based on risk. Itemize, analyze, address, scrutinize the risk involved. And find out if you are able to handle the risk. I mean, the losses. Risk are losses. Losses, 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 losses. Write it down. Risks are losses. I'm not talking about reward. I'm talking about risk. Managing risk is called managing losses. Write it down, write it down, write it down, write it down. Managing risk is called managing losses. Let me change the view, the sharing mode so that you guys can get. I want you guys to get this. Get this, get this. Are you getting it? I'm not sure why it didn't change. Anyway, that's fine. Do you guys understand what I'm saying? Mhm. Let me rephrase it so you understand. Managing risk means managing losses. Losses. Was it a wise idea that we closed out of the trade just now? Did you see now? It was an intelligent idea. You see what happened on the trade? Look at that. We closed right on time. You see? You see what it's doing? So we'll wait for New York section to trade. So the next thing we're waiting for now is that the market will come to this low. Sorry, I just needed to digress a little. If it doesn't break this low, no trade. It had to break that low. That means it will break that low. And then we'll use this other block here as our entry to sell. And then we know the market have shifted. And at this level, we're targeting this low. I'll come back to my teaching. I just wanted you to get an idea of what is going on in the market. Then we will not set to take out this low. All this place will be liquidity. We'll target this zone. But at the moment, no setup. So I'm waiting. So I haven't explained that. So remove your eye from the chart and just learn risk, learn something that will help you to have your account. At least you're managing it. You're not blowing trade. You're not blowing your money. Don't blow account anymore. Losses are risk. Risk are losses. Managing risk means managing losses. Did you get that? Good. When you want to make money, you don't think about how much you want to make. You think about how much you are risking, because it takes money to make money. Write it down. Maybe you didn't know. Write it down. It takes money to make money in the forex market. It takes money. Of course, you know, but you haven't thought about it. When I say it takes money to make money in the forex market, it means it takes money to risk. You see, you have to risk money to make. So there is a probability there that you may make or may not make. You see, you may have reward or you may not have reward, but it all depended on your risk. How much you are willing to lose. Write that down. How much you are willing to lose. It all depends on the risk. So what you make in the forex market is dependent on what you can afford to lose. Write that down. See, when somebody talks about, I made $2,000, I made $3,000, you have to think about how much, what was their risk, number one, and how much was their account size. Somebody can have 500K account size and say he made $2,000 today. And you'll be thinking, man, that guy made $2,000. Ask first, what is his risk? Ask second, what is his account balance? Or ask first, what is the account balance? It says, my account balance is 500K. Uh-oh. Your account balance is 500K. And you said you made what? $3,000? You made $3,000. So what did you risk? How much was your risk? Then you get it. You get the idea. So the guy said, well, I risked $1,000. You mean you risk $1,000 out of 500K account? He said, yes, that's what that is. Man, you are good. And you made what, $3,000? That is more than an average salary. You made it in one day. An average salary for a United States person, one who live in abroad, an average salary, $3,000. I mean, you made it in one day, in one trade, in one day. Say, yes, I did. That's risk management. That's what we call risk management. So now we bring in reward. What is the reward here? Reward is the $200 that is on top. I mean, $2,000 that is on top. So here is the reward. So he had 1,000 gain. The risk was restored. He had an extra, which is 2,000. So you must be able to determine this before you ever take any trade at all. Any trade, you must have this on paper. You got to have a playbook. Listen to me, listen. Let me talk to you as I would talk to my mentees. Listen, look at my eyes and listen. I wish I can take off this board so you see my face. Listen. You must determine your risk to rewards on paper. You must write, you must calculate, you must have a playbook on your risk to reward on a daily basis per trade, any trade you're taking. Because if you make profit, your balance shifts. Your balance is always changing. If you lose, your balance is always changing. So your balance is not stagnant, it's always increasing or reducing. So because of that, you must always have a playbook of your risk every day, every trading time. So let's put it in simple arithmetic now. I hope you get my analysis. So first we have risk, and then we have reward. It's called arrow. I risk $1,000 out of what? 500K account. Is that too slow? Too low? No, it's not. I'm just a different type of risk taker. This is how much I can afford to lose on the $500. Are you serious? Can't you risk more? No, that's the benefit of having big accounts now. That's the benefit of having big, sizable account. Because you can easily risk $1,000. And then $1,000 is something, because if I give you $1,000 now, I mean, you're in fact, some of you, the whole 1 year, the remaining year of your life is just settled. In some country, $1,000 is over $1 million in their currency. So they know that this is money. So when you risk $1,000, it's something out of 500K account. Now, some of you may not think, let me come to your level, maybe 10,000. Some of you can afford 500K, but let me come to 10,000 that everyone can afford, including me. Okay, everybody. All right. Let me not give a hype on you. Let me come to a level that everyone can agree with. $10,000. You bought a $10,000 Profim account. Maybe you bought it with what? How much is $10,000 the Profim account now? How many of you, what Profim do you use? Who is here? Let me see. What is the Profim? What Profim do you use? What Profim? Best way to get into, which is what's the best way to get in touch? Just get to my Telegram and send me a message on Telegram. Also, some of you use Katana. Okay, is that the best now? Katana. Okay, let's look at Katana. Is that the best? No. Okay, that is what you use. Consummate. Is Consummate still being in the market? I thought those guys they withdraw from Consummate. Are they still running Consummate? They have not been promoting it for a while though. They are paying you, is it? Okay, let's look at, are they still working? Are they still in business? Anyway, we are not here to promote anything, but I'm just asking. 5% minimum. All right. Yes, okay. I thought they have issues though. Okay, let's see. Not them. I mean, I think Jeffrey. They are no more promoting it, isn't it? So let's first of all find Trustpilot. Trustpilot will tell us. Trustpilot will tell us if they are still in business or not. Is it consume? Oh, see, yeah, sorry. Consumate trader. Okay, they are still struggling there. I can see that. Yeah, 371 reviews is not a good thing, actually. 3.3 stars, a lot of complaints. Let's check the recent post. Sincerity to pay out. There was a -1 star. I would have given. Okay, this guy's angry. Okay, not bad. It's like they're trying to pick up now, which is good. I can see that they are responding to negative reviews. They are countering it. People are now getting angry. So there are a lot of bad reviews anyway, even recently. If you go to recent ones, you see. But it's okay. Let's use that as an example. All right. And if you live in Nigeria, you can always get that account. Let's use that, but it's not the best at the moment. It's not the best, so I understand. So let's say you want to get funded and you took 10K. 10K account here, this 10K, right? And it depending, maybe you want to do express. This is another thing. I don't like this. Any prop firm that have so many models of trading, run away. I don't like it. It's terrible. It's confusing. It's nonsense. All this is nonsense. What's this? What's this? What's this? Why don't you all just have at least 2 sections? Evaluation and what? And whatever express, probably evaluation and 1 phase or life or funded, whichever one. At least evaluation, two stage of evaluation, which is 2 phase and 1 phase. That's all. On evaluation, you can choose. Under evaluation, you can have 1 phase and 2 phases under evaluation. Then express, you have express, direct funding, instant funding. Then instant funding, you can have 2 things there: monthly payouts on instant funding, and also you have like on demand, whatever it is. Just make it simple. I don't like complications like this. Really, all these things are too much. So if I choose one now, are the rules the same? No, they are not. The rules are not the same. You have one thing on the other. They say, okay, if something happened because you took evaluation EA, okay, evaluation EA, that means you can use what do you call it? Put it there, put it on under evaluation. If they can use EA, let everyone use EA. These are all problems. Okay, let's say for instance, we're taking a 10K account. I don't like all of this, trust me. All these ones is too much. It's just too much. Just get me to 1 or 2 module. It's okay. That's why I don't even like Funded Nest. Funded Nest is big. Funded Nest is big, but I don't like it because they have too many programs. But I think what they have done now is they now focus on one, which is called Stellar. So they are now promoting Stellar. So you can stay with Stellar, which is fine. Okay, 10K account is how much? We're looking at that. That is 10K. That's $84. Okay. We're talking about risk management. $84. You have $84. You bought 10K, $84, which is good. So that means your risk will be $100. Very important. Your risk will be $100. I'm showing you now how to calculate risk. Very simple. Let's say you take 400K account. How much is 400K account? 1,800. So on a 400K account, your risk is $2,000. Did you get that now? Your risk is what? $2,000. Because that's the way they calculate it for you. You are paying this based on the risk given to you on that account. So your risk will be $2,000. This one, on a 200K account, your risk will be $1,000. On a 100K account, your risk will be $500. On a 50K account, your risk will be $300. On a 25K account, your risk will be $200. Are you getting it now? On a 10K account, your risk will be what? $100. That is how you calculate it first. By the account, the money you pay for the prop firm, that's how you will calculate. You have to calculate how much you paid to be able to calculate the risk, so that when you make your money, you make your money back and easy, and you will not blow the account as well. So let's take the 10K, which is clear. You've already gotten that. All right, let's go back to the chart. So you have a 10K account. So we'll now go to the, let's do our maths. We have 10K, okay? And then we are risking 100K. So, sorry, $100, not 100K. We're risking 100. So this is our risk. Every time we trade, as long as we are above, as long as we are above 10K, we will not trade anything less. If your money dropped to 9,000 and you have lost 9,000, you have lost $1,000. Okay, I don't think you'll be even holding that prop firm account. You already blow the account anyway. I don't know if they have up to that, depending. I don't know if they have up to that, but let's say no, you haven't blown it. You haven't blown it. I think it's 85, around 8,000 something, or 7,500. That's when you blow the account also. So let's say you still have this, then you'll be risking $90. You risk $90. Okay, you risk $90. Okay, that's what you do. So here you risk 10K and above. You will still stand. You will be risking $100 anytime until you withdraw profits. That's what you do. So now, how do you now calculate your reward? It depends on your trading strategy. Your trading strategy, your reward, it depends on your trading strategy. I'm talking about rewards. It depends on your trading strategy. If your trading strategy and you back test it and it gives you, at least when you risk one, you can get two out of risking one, then your risk to reward based on your trading strategy will be 1 to 2. If your trading strategy can give you up to 3 when you risk one, it can give you up to 3, then it is 1 to 3. But you must have a benchmark, an average. So between 1 to 2 and 1 to 3, that's the way I trade. I look at between 1 to 2 and 1 to 3. And if you check this trade that we took here, it gave us 1 to 2 easily. It was in 1 to 2. No, did it get to 1 to 2? No, this one didn't get to 1 to 2. All right, it get to 1 point something. All right, but we were above 1 to 1. So some traders, professional traders, normally go with 1 to 1.5. They are good with it, and I will show you now on the chart how it looks like. But I will first of all do the calculation. So now we know that reward is based on strategy. It's not based on what you risk. It's based on strategy. So strategy must give you, your edge must give you an opportunity to catch into the trade. Your edge must give you an opportunity to catch into the trade. So that's what you're looking at. You must have an edge that have at least 2 or 3 arrow. You must have it. 2 or 3 arrow. That means risk to reward. 1 to 2, 1 to 3. You want that strategy that give you 1 to 2. Otherwise, you'll be struggling with profitability. Okay, you need to be profitable over time so that when you lose, you still stay profitable. Okay, and it's easily understandable. If you have, let's say you have 10, I'll just go through the process with you now. So let's go to let's go to the tools that we need to use to calculate. So then you need a tool to calculate. We trade a Forex. Let's go to Forex. And we trade any pair. You can use any pair, but let me just use GDP USD or Euro USD. Okay. And you can type it here as well to make it easy. GBP USD. And that will give you the pair. And you click on it. automatically it tells you open price and it tells you whatever. But if you want to use only stop loss, all right, you can use only stop loss. But it's good to have open price and closing price. And let me show you how to do that. It's very simple. You will not come here. Let's assume you want to trade this buy. Okay, you're trading this buy that just happened, and you trade breakout. That's your strategy. Let's say you use strategy of breakout, and then you have a breakout on this candle, and immediately you had a breakout, you were able to buy. So your entry will be long from a breakout candle, which is that candle right there, and then your stop loss will be on the previous structure low. And you were targeting, let's say you target this high as a TP or this high. So if you target that high, the previous high, that is 1-to-1. The question is that your strategy? You see, that would be 1-to-1 right there on that high. But if you target this high, all right, that would be 1-to-1.5. So you must have a strategy that gives you an edge. But this one now gives you 1-to-1.5. So let's assume that you were targeting this high as 1-to-2. This is your setup. Let's say this is, and you are still in the trade because you still think that trade will come up. So you are not leaving. You are still in profit, and this is where you're targeting. So here is what they're asking you. This is the entry opening price here. That's the opening price. And this one is the stop loss price. So you take this number, assuming that you're waiting to get into this trade at this level when price is here. Remember, this is news. This is news. So you take this information while you're waiting. You take this information and then you take it and put it here if you want to. This one helps you a lot. It helps you to have accuracy on your risk. So you take those numbers, that is 24,330 opening, 24,17. So you come here, opening candle, this is GDP. So you have 1.24 and then 330. Is it 330? Sorry, 38. Let's see. 1.2438. 1448. Okay. 1248. So we have 4438. Then this one, the same thing. 1 point, you put it there. You have to put it there because you want to get accurate calculation of your price. So here is 124, 174, 179. So you come here, 124, 179. And then you are risking what? 1%. How do you know? Because your risking account is what? $10,000. 1% is what? $100. That's what you're risking. 1% is what? $100. So you hit calculate. This will be your lot size. So it tells you that money at risk out of the 10K you have, money at risk is $100. Very clear. It tells you money at risk is $100. This will be the lot's trade size. It tells you the lot size to enter. So I will enter 0.39 or 0.38. If I approximate the last 6 number, it will be 39. So if I round it up, it will be 0.39 lots on my entry. So I will come here and I will go to my MetaTrader 4 and I will put the price here on the lot size. I will put it there once the price get there. So if you play on this, you will notice price did that. So you get in. So now you enter the trade here. And what is your lot size there? Your lot size at this level, lot will be what? Equals to 0.39. That is your lot size. So once you do that, the question is, how much will you make if price hit your TP? It's up to you. But it will not tell you. You just have to know what is giving 1 to 2. So you're risking 100, 1 to 2 is 200. So here now on TradingView, you can actually calculate it very simply because you've already done this. So you have $10,000 balance on TradingView. That's $10,000. And then you're risking 0.39. That's what you're risking on your lot size. And so what is the percentage risk? You're risking 1%, not 3%. So it's already calculated it. It's already calculated it because the price, entry price, everything is already there. That's all you need to do. And if you hit enter, it will tell you 1 to 2. This is how much you make. You make your money, your balance will be 10,207. If you lose, your balance will be 9,900. Question, are you okay with that? If you are okay with it, the next thing you do is to order it. Period. It does not matter if price begin to play around and say, oh, it comes up and then it comes down and then it comes up and then. Don't shift. Don't move your stop loss. Leave it there because that's what you agreed to do. If you move your stop loss, you are not a trader. You're a gambler. Period. You will never learn how to trade. If you move this stop loss, if you move this thing, then you are a gambler. You are not a trader. I'm not trying to insult your personality. I'm just telling you that's what you're doing. You are gambling. You're not trading. You're gambling. Don't move it. Leave it there. Because you already planned it that this is what you lost. This is what you want to lose. So why would you do otherwise? How would you do otherwise? Why would you do otherwise? Trust me. Why will you do otherwise? Stay on the go. Stay on the go. That's what you're looking for. And then trade triggered you in. You're in profit, run around, and then that's where you can say, oh, I'm in profit now. So let's see how much it is when price is here, how much you have made so far. If you move it down, it will tell you that you have made $88. $88. Right now, you are in $88 plus. That's money. So what do you do? If you say, well, if I get to $100, I'll close. That's 1 to 1. Because you risk $100, you made $100, you close. So if your risk, what do you call it? Your phase that you need to pass is 8% to pass phase 1. You just need 8 trade like this with discipline of 1 to 1, and you will pass the phase. 8 trade with discipline of 1 to 1, and you will pass the trade. 8. In 1 month, you can get that, depending on your trading strategy. And in some trade, you might lose. You might lose some trade, depending on your trading strategy. So, but that is your goal. And if you lose 8 trade at a row, if you lose 8 trade at a row, how much is that, guys? That is $800. 8%. So what is the overall, according to Consummate, what is the overall loss? Let's see. 12%. Maximum drawdown is what? 12%. So you can still actually trade, even though you've lost 8%. You can still actually trade the account. It's just that you will not be trading with so much psychological trauma because you're trying to regain 8% and then stay profitable. But that's why you have to work on your, you have to work on your reward based on strategy and edge, and discipline. Follow the rules. But it will take you 12 different trades to lose the entire account. So if you just lose 12 trades at a row, then you are not a trader. Go to demo account and learn. Go and learn how to trade. Now, here's the part that I want to address before we close. It is the part that some people will lose this 8% in one trade. And that is indiscipline. These guys put 5% daily drawdown is because they are helping you. They are helping you to maximize and utilize risk management. They want you to learn that you're supposed to be risking 1% out of the 5% maximum day they give you. Except you know what you're doing. There's somebody I know that can risk 5%. I mean, he will risk 4% out of the 5. He will risk 4%, and then when trade move 1 to 2 on his trade, he's already 8%. He closed out. He has passed the phase. He passed the challenge. He's done. But you don't do that if you're learning. You don't do that if you don't understand your edge. You don't do that if you don't have money to lose, to waste. If you have money to waste, that's fine. Just buy 10K or 20K challenge and trade it like this. If you lose the account, buy another one. Trade it again. If you lose the account, buy another one until you pass, and then you master the skill. That can be your skill. But if that's not it, that's gambling for me. That's a casino guy. But if that's not you, bro, risk 1% out of the 5% daily maximum loss they give you. Risk that. Once you risk that, trade softly, because the 8% is achievable. 1 to 2, okay? From 1, that means you risk 1%, you make 2%. You risk 1%, you make 2%. You risk 1%, you make 2%. You risk 1%. So 4 trades is what you need, 4 to pass. Only 4 trades. 4 trades to pass the problem. 4 trade. 4 trade, just 4. But we still have people struggling. Why? Because they are greedy. They will risk 2%. They will risk 3%. And then they don't have an edge in the market. They are struggling with edge. They don't even understand the winning strategy. They are still struggling with the strategy. They don't know how the strategy works. They don't know how to understand candle behavior like we did here. They don't understand these things. And they will just leave their trade, and then trade will come down. See, market gave us opportunity to change our minds. Let me show you. Sorry, I'm messing up my chart. Here, market gave us opportunity to change our mind. That is not going up. Will you take profit now, or you want to stay? Now, it takes, this is now greed. It is now the amount of level of your greed that will make you stay in this trade. And it's obvious that the market has given you a sign that is coming down, but you want to stay. And then, bam, you are not in drawdown. It will go back. I will just let it go back up. Since there's this bullish candle here, it has not filled the bullish. Then the next thing is price create market structure, tap into this. It broke through this structure and tap into it and reject, and then smash that. Bad omen. You don't understand market. You don't understand structure. You don't understand system. Then you blow account. That's one side that people use in blowing account. Another side that people use in blowing account or failing their challenge is this. When they give you 5% daily drawdown, then when it's news, you go and put 2% on the entry or 1% on the entry. You leave your stop loss open. You put 2% on the entry here, and there is no stop loss. And the news came up, bam, wipe you out and wipe you out big. So you are using big loss, a big risk. You're risking big beyond what you're supposed to risk, and then you didn't have a stop loss, or your stop loss is way bigger than your reward. How are you going to make money? So risk what you can afford to lose. Until you can afford to lose more, don't risk it. If you cannot afford to lose 2% of the account, don't risk it. If you cannot afford to lose 3% of the account, don't risk it. If you cannot afford to lose 5% of the account, do not risk it. This is the golden rule of risk management. This is the golden rule. Don't risk it. I just told you what the prophet did. Some people didn't know, but let me go back there. I showed you what they did. They gave, I'm using Consumate now as an example. I don't have an account with them, but they told you if you buy 25K account with what? With 1,000 I mean, $199. That's a $200. So 25K account is a $200 account. That means that is your risk. If you are trading it, that is what you invested to buy this account. So that is what you should be risking based on the size of the account. Anything higher than that, you are just over risking. So let's come back here. Let's say the account size is 25K. Then you hit calculate. Did you notice it said $250? But you want to risk 200. You want to risk 200. I mean, yeah, you want to risk 200. So you say, I'm risking half of that. Okay. If I want to risk 200, let's say I'm going for 0.8. Good. 0.8 give me 200. So my risk on 25%, $25,000, it is not 1%. I'm risking 0.8% on my $25K account. Because on the account, how much I bought it is what? 199. I bought it for 199. That's my risk. So for that reason, that's 200, rounded up, $200. So I can afford to risk $200 on a 25K account. And it's less than 1%. It's less than 1%. That is risk management, guys. That if you can put that in your system, if you can put that in your system, you don't have problems. Please, since you are a Nigerian and you have a Nigerian address, please speed up on the seller platform for us to be able to access you, because getting VPN is expensive. Okay, Michael. Listen, we'll work on that. Did you guys get the idea? Very important. Very, very important. Very, very important. Very, very important. Any question? Did you get this? Go and practice. Jeff wanted to withdraw 3 million and it was too much. They will pay you if you have a 10K account with less than 10% profit. Run away. Does the stop loss rule apply to TP? Remember, when you are trading, your goal is to multiply money, not to lose. If you have you started a trade, you invested $100 to trade, and then by the end of the day, okay, by the end of the day, you were able to make $5 on top of it. Then you now close 105. Have you increased money or you have reduced? You just learn how to multiply money. Your money has multiplied by 5. The next day you trade again, it increased to 1,015. You have increased your money. This is the skill that you need, brothers and sisters. This is the skill that you need to trade. This is the skill. That is why it's called trading. But within this phase of moving money from 100 to 120 or growing it, there is a temptation of greed. That's the problem. The greatest problem we have is called greed. Greed. Go and study greed. It will change your life. Everything we do has an enemy called greed. Everything, especially money. Especially money. When it comes to money, if you are not in control of this thing called greed, it will control you and it will destroy your emotions, destroy you psychologically, destroy you internally and externally and otherwise. Okay, guys, I'm running up now. I think you have gotten a lot of education today. I normally do this once in a while. I believe everyone have learned something today. Go and practice. Go and practice. Any question? You see what's going on here? I told you they were dropping. So I'm expecting them to break. Let me remove the drawings. For those of you in the trading, daily trading lab analysis, you get this. We'll wait for price to break and then pull back, probably break and retest here or pull back into any of this level, and then we'll sell, which is this level here. All right, guys, thank you so much. If there are no questions, no comments, ensure you practice. Practice, practice, practice. Okay, practice, practice, practice. You can join my Telegram group. The link is in the description of this video on YouTube. Go and watch it on YouTube. Everyone go there and watch this thing on YouTube. You'll find my Telegram link there, my TikTok, my Instagram link, everything is there. You can follow us, and then let's publicize the information. Let's help people more. All right, so turn on the bell notification if you have subscribed, and then expect prize. You're welcome. Expect us to come up again to share any of the trading setup that we have. Bye for now, guys. I'm done. If there are no questions, I'm done. If there are no questions, I'm done.